Hey everyone, welcome back to another video. In this video, I'm going to be talking about a stock that I found in the market recently that could be presenting an interesting buying opportunity at the moment. And that stock is Juniper Networks. And we can see this stock is up about 5% over the last year. In the same time period that the S&P 500 is down about 11%. And over the last 5 years, they're up about 15%, 17% over the last 3 months, and 11% over the last month. So they have been on a little bit of a tear recently. So we're going to see if this stock presents a good buying opportunity by looking into their financial statements and then figuring out the intrinsic value per share for their company by using a discounted cash flow model. And so right here, we can see this is their official website. And essentially what Juniper Networks does is they design and sell products and services for high performance networks in the cloud market, as we can see right here, and then also in the public sector all over the world. So they sell to customers globally as well. And so right here, we can see these are their financial statements reported for the third quarter earnings results for 2022. And this is their income statement. And we can see that year over year, their net revenues have increased by about 19% from 1.1 billion to about $1.4 billion. And their net income has increased even more to about $121.5 million, up from $88 million. So that's an increase of about 37% year over year. So there's definitely been a lot of earnings growth for Juniper Networks over the last year or so. And so now right here we can see this is their balance sheet comparing September 30th, 2022 to December 31st, 2021. And during that time period, their total assets have pretty much remained almost the same, increasing from around $8.8 billion to $8.9 billion. Total liabilities have increased by a little bit over a bit, or a little under $1 billion as well, from 4.5 to $4.63 billion. And then total stockholders' equity has mainly just stayed the same from around 4.316 to $4.338 billion. And we can also see that their additional paid-in capital line item here has decreased slightly from $6.9 billion to $6.8 billion. And so that obviously decreases when a company repurchases shares of their common stock. And that ends up increasing the return on investment for their shareholders by reducing the amount of shares outstanding while increasing the market capitalization for the company. And so now we can see final financial statement here, their cash flow statement for the first 9 months of 2022 compared to 2021. In the first 9 months of 2022, they actually have net cash used from operating activities of around $22 million. That's a decrease from $573 million of a cash inflow from their operating activities in 2021. And of this cash outflow of 22 million in the first 3 quarters of 2022, they had a positive cash inflow of about $51.8 million in the third quarter, but that's also down from a cash inflow of around 136 million in the third quarter for 2021. So their cash flow has not been as good in 2022 compared to 2021. And in their financing activities, we can see where they're returning value to shareholders, particularly in this repurchase and retirement of common stock line item and the payment of dividends line item. We can see those are their 2 largest line items in their financing activities of around $226 million for repurchased common stock in the first 9 months and around $200 million worth of dividends paid out to shareholders. So that is definitely a ton of value returned to shareholders, especially considering the fact that their operating activities for 2022 are negative, and yet they're still prioritizing returning value back to shareholders through repurchasing common stock and paying out dividends. So that's definitely a good sign for investors in Juniper Networks who are looking to get a better return on their investment. And so right here, we can see this is their discounted cash flow model, trying to figure out the intrinsic value per share for their company. Yahoo Finance is estimating that this company is going to grow at around 16% for the next 5 years, compounded annually. And they also had around $589 million of free cash flow in 2021, around $750 million worth of debt on their balance sheet, with around 324 million shares outstanding. And so that makes their intrinsic value per share around $34 per share, which means that right now Juniper Networks is trading right around their intrinsic value per share, since they're trading at around $33 per share at the moment. So if you wanted to buy into this company at a margin of safety, given the projected 15 to 16% growth rates for the next 5 years, you'd probably want to buy into them at around 50% of their current share price, so at around $17 per share in comparison to where they're currently priced. And on the right side here, I did a competitor analysis comparing them to three of their main competitors in this industry: Cisco, Fortinet, and Palo Alto Networks. And we can see that Palo Alto Networks actually is not profitable. That's why this net profit and return on assets sections right here are empty. They do have a 68% gross profit margin though, so that is one of the higher gross profit margins in this industry. But we can see that Juniper Networks is actually not doing that good from a financial ratio perspective. They're losing across the board to all of their competitors here, particularly Cisco and Fortinet. They have a way lower net profit margin than the other two competitors, who are around 20%. Juniper is only around 5%. And then Fortinet and Cisco both have around a 12% return on assets, whereas Juniper only has like a 2 to 3% return on assets. So from a competitor standpoint, looks like Juniper would not be the buy. You would probably want to focus on either Cisco or Fortinet from a competitor analysis perspective. But from an intrinsic value perspective, we can see they are trading right around their intrinsic value per share of $34 per share, since they're trading at $33 per share right now. And their stock price is beating the market in the past 12 months. And we saw that their earnings growth was sitting at around 37% on their income statement. So a little bit of good news for Juniper Networks. They're doing better this year than they were last year, and they are beating the market in terms of return on investment. But based on the financial ratios we saw in comparison to their competitors, they could be optimizing their business efficiency a little bit more to remain competitive in their industry. So I'm not really too sure what to think of Juniper Networks. Definitely a little bit more difficult nowadays to find companies that are trading below intrinsic value per share. So this was a rare find for me. Let me know in the comment section down below what you guys think of this stock. Is it a good buying opportunity right now? And are you planning on buying any shares of this company? Let me know down below in the comment section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.